Let's say Olga's bakery budget is to sell 100 loaves of bread per day and has calculated the expenses for 100 loaves. But after the first month, Olga realized that they have been selling 130 loaves. In this example, 100 is a budgeted figure for supplies and ingredients. But based on the first month's end information, Olga predicts that output will actually be 130. 130 is a forecasted amount. In this lesson, we'll explore why forecasting is so important and the 4 steps to forecasting. Having accurate forecasts will help you plan better for operating activities, expenses, salaries, and as a direct result to influence your cash flow. First of all, let's make a clear distinction between budgeting and forecasting. Budgets are usually set for a defined period of time, for example, per quarter or per year. It is a financial target. If you are looking to raise funds for your business and take a loan, then it's likely the banks will ask for a budget. On the other hand, a forecast is here and now. It analyzes the past results to help look into current and future trends, to give you a more realistic idea of how the business is going and help you to avoid problems. This needs to be done at least monthly. My tip is to have a chat with your accountant because forecasting is one of the most important tools for businesses. It has a direct impact on your cash flow. Forecast is an accurate prediction of sales and expenses. And the 4 steps to forecasting are: first, ensure accurate data is available to build your forecast. Rubbish in, rubbish out is a popular accountant speak. It reminds us of the importance of the accuracy in reporting. Second, review your income and outgoings against your budget. For example, tracking how many guests are staying in the room will help to forecast how many breakfasts need to be prepared the following day. We budgeted 100 rooms, but we sold only 80, so we need to adjust orders and staff accordingly. Use the pipeline of bookings and inquiries to help you build a clear and accurate picture and forecast for occupancy levels and revenue coming in. Third, adjust your strategy to maximize the opportunities or reduce your expenses. Let's say one of your selling units or services does not deliver the level of sales you budgeted. What do? You can continue spending more money and effort on promoting the service, or you may even drop the prices in order to gain sales. But if there is no appetite on the market, then it's unlikely to generate more sales. What you could do instead is to change your strategy and activities. For example, focus on the sales or services that are in demand. If there is a slowdown on international travel, then you need to adjust your strategy and focus on the domestic market. Reduced sales will prompt a decision to reduce of your expenses. Let's say the number of tables booked for lunch is less than you expected. Therefore, you may reduce the number of employees working during lunch hours. All of these changes will have a direct impact on cash flow. Not all inquiries will materialize. Cancellations need to be tracked as well, as it will help to analyze and predict the volume of business. Having prepayments gives more assurance to operators that bookings will materialize. Forecasts are there to adjust the strategy and make business more profitable. Lastly, keep clear communication with stakeholders and your team. Communicate with your financial and your operational team. Being able to gather small pieces of information, predict consumer behavior, and influence decisions will all have a direct impact on the cash flow. Your turn now. Check the actual income and expense result against your budget. Did you have any additional expenses? Did you have any additional income or revenue? With this information, go ahead and make your forecasts more accurate. Here are the 3 notes to remember about forecasting. Accurate forecast will help you plan better and have a direct impact and influence on your cash flow. Forecasts are here now, and they need to be done at least monthly. And forecasts are there to adjust strategy, maximize opportunities, and make business more profitable.